I covered Covalent briefly in my recent video about the coins that has potential in October, but now it's time to go into more details about it because it's ready to explode. Hey everyone, welcome back to the channel. This is King, your host, and today's video is for pure educational purposes. If it's your first time on the channel and you happen to like my content, please consider subscribing and smashing the like button. Also share it if you think it's worth sharing. Now let's look at the chart. Now before we get down to the analysis, there's a very important point to keep in mind here, and that is Covalent does not have a lot of history. In other words, it's a new coin. So why is that important? Because usually history helps us forecast the next moves and understand where the price might face any rejection or how far would it go from here. But anyways, what I'll be doing with this structure is that I will count on my own experience from previous structures that are similar to this one. So let's get down to it. After the initial impulse that Covalent did from its all-time low at around 31 cents, it went all the way to $2.1, and then it started creating a corrective pattern. Now you may notice here that this corrective pattern is a little bit messy, and it's not like most of the corrective patterns that I usually draw. And to be honest, it took me a little bit of time to try to understand how is this corrective pattern broken down, and I had to go to the line chart in order to make sure I understand what structure is this. Now you can see in the candlestick structure over here that there are a lot of wicks that are going outside of the structure which I highlighted, and this is not something that usually should happen when you try to analyze a structure. So that's why I counted on the line chart, because the closing of the candles made the structure look much better. So if we go to the line chart, we will notice that the correction now is much clearer, and it includes three waves, the WXY. So this was the initial corrective impulse down, and then it went into a three-wave middle correction, and then it had another impulse down, which is wave Y. So overall it formed what we call a running flat pattern. Now the reason that I'm saying is that this correction is complete because we already got the initial confirmation that said it is complete. So if we extend the trend line of this correction, which is the upper trend line, you will see that the price broke out this trend line at this point over here, and it continued going up. So if this did not happen, we would have still be in a downside correction because we were still under the trend line. But as soon as we got this confirmation, this initial impulse, and then we formed some kind of flag below the trend line and broke out from there. So this was a confirmation that the correction is complete and we are in a new uptrend right now. Now if we go back to the candlestick chart, we will see that as soon as the price broke outside the trend line and started trending up, it went back again to retest the trend line. So usually the basic rule for these kind of things is that when a trend line or a support area or a support line is broken, it turns from resistance into support. So that's why as soon as the price breaks outside a resistance area, it tends to come back and retest this resistance area, but this time as support. So if this support holds, then it is confirmed that we have reversed the trend and the resistance turned into support right now. However, if that support does not hold, and let's say for example we continued going down from here, so this means that this was a fake breakout, and we will have a more complicated structure to the downside before continuing our uptrend from here. Now in addition to breaking outside the downtrend line and retesting it as support, there is another confirmation that we might have over here, and that the price has already started forming a series of higher highs and higher lows. Now we don't have a higher high yet, but we do have a higher low. And as I always tell you guys in my videos, that this is the most basic concept that can tell you if the price is going into reversal or not. So this was the rock bottom where the price reached its lowest. After that, it went to form another high here. Now this high broken the last high that we had, which is this one. So it went a bit higher. So this was a higher high, and then we formed another higher low. Now, in order for us to be 100% confirmed that the price is going to continue its uptrend, what it needs to do next is that it needs to go up and break this previous high. So we have in the new trend, we have a low, we have a high, and then we have a higher low and a higher high, and that will completely confirm the downtrend reversal. And anyways, this is the scenario that I'm more lenient to take over here, because this pullback is corrective in its nature, and it doesn't seem like the price is going to go down further than this. So it seems more like a pullback or a flag, let's say, and the price is likely going to continue going up and break outside this top very soon. But the important question that I'm sure all of you are looking for its answer: what is going to happen next, and how far are we going to go from here? Now, if we zoom out a little bit and try to look at the structure on a bigger scale, we will see that we don't have enough data in order for us to be able to tell what kind of structure Covalent is going to form in the future. Now, as I always say, the price moves in one of two structures. It's either a 3-wave structure or a 5-wave structure. Now, the difference between these two is that on the 5-wave structure, we usually don't have divergence between the first impulse and the second impulse. And since we have in Covalent only 2 waves that are complete, so it's not possible yet to tell what's going to happen next, because all what we have is the initial impulse and the correction, and now we're starting to form what seems to be the next impulse. Now, unless the price breaks outside this previous top over here, unless the price goes and break above it, we won't be able to tell if there's a divergence between the first impulse and the second impulse. However, let us use 2 simple concepts to try to forecast what is the upcoming move for Covalent. On the first method, we will look at the previous complete impulse, and we will assume that history is going to repeat itself, and the same thing is going to happen here. So as you see, as soon as the price started trending up from this point, it formed an initial impulse that broke outside this trend line, and then it went into a corrective flag. Now, this is very similar to what we have over here, because the price also formed an initial impulse, and then now it's forming a corrective flag. So if we assume that what's gonna come next is similar to this piece, so this is the kind of move that we should be looking at next for Covalent. And as it shows over here, the price is reaching a high of around $7, which means that's going to be about 500% growth in price from this point. But personally, I don't believe that this is going to be the case, because usually the second wave of the structure, whether it is 3 waves or 5 waves, so usually the second impulse of a structure is the biggest one. So we are most likely to see the price having a further extension from here, and it might go all the way to $10 or $11 or maybe $12. This is all still in the guessing narrative, but I believe this is the most likely scenario that we'll see happen from here. And if that happens, we are most likely going to be looking at around 1,000% growth in price. But if we take the second method and try to plot the Fibonacci extension levels on the current price structure, we will see that the standard scenario for most of the pairs usually says that the price will extend towards the 1.618 Fibonacci level, and that puts the price at around $3.74. However, because I told you that this is not likely to happen because the second wave is going to be longer. So I expect that we might be going way further than this. So we are likely to test the 3.618 Fibonacci level, which is around the $7.36, or we might even go further than this. In both cases, whether you take the first method or the second method, what we have clear as of this point is that the uptrend is resumed and the price is going to likely show us new highs very soon. Now, you may have a different opinion or a different point of view. So if you think otherwise, please let me know what is your view of Covalent and how far is it going to go next in the comments below. And also tell me if there's any other special coin that you would like me to cover in one of my future videos. This was it for today, and until next videos, stay safe and see you later.